Hey, what's up, everybody? Welcome to the next video. In this video, we're going to go back over what trends are briefly, what engulfing candles are briefly. Then we're going to move on to our next indicator. Our third indicator is going to be the support and resistance zones. So earlier we determined that, or we learned that in the first video, engulfing candles, selling power going down in red, and a blue candle going up. It may be different on your chart, but a candle going up, it says, and engulfs the previous. So you can see that selling power is overtaken by buying power by the size of this candle, and it engulfed, or it's bigger than all these. We begin to see an uptrend. When we termed the trend was a series of points, 3 or more connected to form a trend. Two trends, form a channel. They're side by side. I'm counting this one here because there was an engulfing candle here, so this shows a point of rejection. Excuse me, power, a transfer of power here. We see it here. It influenced at this area to go down. We have engulfing candles to go along this area. Price was here. At these points and turn around. Ideally, you want more than that. You want to be able to line this up with another form or another way that we determine highs and lows, and that is through finding highs and lows. But unlike a trend, support and resistance zones, the support zone is going to be below the price. This is the price line. Support zone is going to be under price. A resistance zone is going to be a high. A series of highs to connect to form a resistance zone. Price comes from underneath, it's resistance. If price is above, it's a support. If price is underneath the zone, it's a resistance zone. So let's draw a resistance zone. Again, these don't have to be exact, but you don't want to blow them out of proportion either. Again, it's just all about balance. Sacrifice a wick to connect a body. So we have several rejections here. We have one here and here. If we're looking only at this bit of information on this time frame, which each one of these candles represents a day, we can tell that the high from July 25th, the 11th of 2011, this was a high all the way to 23rd of October 2009. The price may have went above the zone, but momentarily came back down. So when it comes to confluence, you want to find an area that meets both. We may not be able to see this clearly on this time frame, but let's zoom in. We have to drop down to the 4 hour, but so we see an uptrend. Actually, if we draw some this, got more points. Some wicks, body, drew through a wick, connected bodies, body, little wick sticking up, connected a wick down here. To make this look or be more accurate, disregard this, got these. So we were in an uptrend, a high, higher high. We'll stick to ones in the channel. Higher high, higher high, higher high, higher high, and a higher high. It meets where trend meets the zone. You see there was no higher high up here. We see engulfing candles, buying to selling, but there was no buying. It went straight from the trending zone and reversed. But you'll notice something else. We have a price action pattern. We'll cover these more in the next video. But it was rejected once, twice in our area to where it made an M shape. One rejection, two rejections, three rejections, failure to make higher high. No higher high was up here. Failed to make higher high above the zone and the trend. It gave us a double rejection at this area. This is a good indication that price is going to go down. This is one of the first signs that you'll see in an uptrend that it's going to change or that it could change. But you got to have it in alignment with your other indicators, your zone, resistance zone, the trend, and then next, what we're going to go over is the price action pattern. Double rejection, failure to see higher high or lower low, But let's draw some more zones. You're going to see zones within zones, same way that you see trends within trends. You can see it straight across here in this area. Price has been rejected several times from going lower down here. So let's follow the crosshairs over wherever you see as many touches where you should draw your zone. This is where current price is, so definitely going to be paying attention to this. So this would be a support zone. It's not as major because it's not at the top. It's in the middle, but you still need to pay attention to these points because they turn around price. And if you can find a trend coming down, and reaching these points, you can see how it sends in the other direction. This is the low according to this time frame. But really what you want to focus on is circling around this price, where current price is. Getting your information for your trends and zones from further back or on a higher time frame. Is necessary. So you got to get a broader perspective of how long these areas have been holding, because you want stronger indicators to get higher probabilities, turnouts in your trades. So you can see here price was rejected. It was rejected here. It came down, stopped here. When it went below, it stopped here, here, right here, all this, right here. You just got to balance it out. Here you can see another trend. One, two, three, 4 touches. You have a price action pattern, break through that trend, and it's heading towards where we got larger amounts of selling activity that came through, retested the trend. Here's our bearish engulfing, showing us that there's a good chance price is going to continue down, especially after this price action pattern. It's double rejection on top, send it underneath, reverse the price, and now all this between us is this next support, this next low. So if you were going to sell, you sell after the double rejection into the new area we determined by trend and zone, and wait for the engulfing. And try to find some type of zone on top of it. Zones and trends are everywhere. When you use them in confluence, they have more power together. So right here, you can see that this was a support zone. When price was above here, it held up the price several times. From below, it was resistance over here. It came down, hit our trend line, was rejected twice at our zone. The second time it was rejected, it was at a trend line. We have bearish engulfing candles taking over 1 time, 2 times, to where it broke the trend. It came back up. This is what we call a retest of a high or low. We got bearish engulfing, and so we got bearish engulfing again here. And so we would start to think, or I would start to think, up here in this area where we gather the confluence, this is what we're looking for. This is one variation of what we're looking for. We're going to be going over several of these, not just in the course, but in the training, market reviews, stuff that we do. It's going to be a repeated thing over and over again. We're looking for the intersection of a trend, a zone, with price action confirmation. That's the engulfing candles, and wicks. Wicks represent rejection as much as an engulfing candle does. So this engulfing candle right here shows a transfer of power from this bearish engulfing, shows a transfer of power from buying, a second attempt to go higher, was overtaken by sellers. These wicks represent the price was once here, but sellers pushed it down. It was rejected over a period of time and was pushed back down. All these wicks, when you use them at an area where a trend in a zone are, help to build confluence. I would not rely just on the wicks. We need engulfing candles. That means the body sets past the previous at a trend, resistance zone, or support zone. The wicks just add extra confluence, because we know that for 2 days they tried to push, 3 days they tried to push price above this line several times here. It was rejected, and it's at this trend and zone. We get a second confirmation, we get rejection, bearish, control, indecision, rejection in the form of candlesticks, rejection in the form of engulfing candle at the zone and trend, and it goes down. This is an ideal scenario because we have, or one of the many, there's many kinds of ideal scenarios, but they all involve confluence. can see it better. We had rejection at our trend. In zone, this is a hard point, showing a strong rejection from a steep downtrend. Dead stop once, twice, engulfing on the second, on the retest. Price went up just by the zone itself. And then we saw a little uptrend. Failure to make higher high. Again, no higher high. There's no higher high here. Price went down below where the zone served as support. We got our one rejection, two rejections, the wicks, the engulfing candles that finally sent the price down below the trend to where it is now. This will be the next stopping point I would look for. Any place you see price stop and take a turn, you see here. In this zone, we got a downtrend, selling power, short burst of buying power, rejection. So this shows rejection, engulfing candle at our trend, at a zone. So this says it's going down, came to a stop, one rejection, two rejections. Here's our engulfing candle right here. Price went up to the next zone. Came back down. We got engulfing right here, but it was overtaken. We have another double tops. It's a price action pattern. So you can see when price reaches a trend and or zone and gives you double rejection, the price is likely to continue in that direction where the rejections came from. So this would be a double bottom. So they call it double bottom. And this is a double top. So 2 points of rejection from the top that reversed the price and it came down. You see it again here. Price was rejected here once. Let's start from up here. You can see there's a zone here. The price was rejected 1, 2, 3, 4 times. You can use a trend to determine that, or you can use a zone, use a trend. So see another trend. It's just about connecting the dots. As you can see, it drew through here. I noticed a hard rejection here, and it carried on through here. So we want to keep that in mind. But zoom in a little bit. We see that price was in the trend. It went up to here. We got bearish engulfing. It came up to the high again. We determined as a trend. And we got engulfing down here. And it resumed. It stumbled a little bit here at the trend. So it noticed the trend. After it breached, it was sent back down to the bottom of the support. So you see double tops up there. More look here. Use this high. We'll stop right here because this is a head and shoulders pattern. Price went up, it was rejected, went down, was rejected, went up here. We're using this wick. It went down, came back up, was rejected, and sent down to the again to the bottom of the zone. You can see it again. Here, price stopped the trend. We got, this time we only have the wicks. Our engulfing starts down here. Let's start from down here. Price is going up, meets the trend, sees the wicks, and goes down. We get rejection. Price was pushed down here, but it's pushed back up by buyers. So we see bullish candles here. It's the top. And then we see change of power through these 3 candles serving as engulfing pattern to this blue one. So we see it shoot down to the bottom of the zone where we see it was rejected by this wick. We have our next bullish engulfing right here. This is bigger than this green one, or not the green one, but the orange one or red one. And price continued to go back up to meet the trend again. We got engulfing here, and it stopped. So y'all can see, follow this yellow line to these points of rejection. All these that form a zone. Let's send the price up. We see rejection in the form of a wick. Price was pushed up, pushed back down, refused, rejected by the sellers at the trend, and then we see engulfing right here, and it goes down. So double rejection at a trend, engulfing. This is one pattern. Double tops, head and shoulders. We're going to be going over these more in the next videos to show you again where to look for these indicators along trends, zones, between ideally the intersection of a trend and zone, but you can play it off of either one. But we need to have a full pattern, show a full rejection. You have full rejections, at least two, to show a full pattern to where it breaches across a neckline, and that's where you have your first reversal pattern when these are complete. And there's a neckline, and the neckline is where it stops in the middle. The neckline on the head and shoulders or triple tops or bottoms, they come in two forms. This would be the neckline. At that point, it would be completed. Once it breaches this, we're going to be going over those in the next videos, along with the trends and zones and the engulfing candles, how they make patterns, where do you need to spot the patterns for them to have the highest probability of turning the price around for you to get in for a sell when you see one. When they're complete at this area to sell, and when you see them at the bottom at a support, one rejection, big sign of rejection, wicks, rejection, where to buy. So on this one, this is another double bottom. You draw the neckline straight across this point of rejection here to determine whether or not the pattern is complete. In this section of training, we're only focusing on these indicators, the engulfings, the wicks, to show rejection, to show multiple rejections at a trend and or zone, preferably at the intersection of zone. By trend, by identifying a high at a trend or zone, preferably both. We'll see more of that in the next video. See y'all there.